Okay, we're going to talk about that. Remember I mentioned tick, tick, tick. What does that mean? So for those of you that were here last month, I talked about the real estate cycle. Every area has a cycle, and I'm going to expand on what we did last month. And because there's a lot of new faces in here, and there's so much that has changed since last month, I thought this is probably a really good topic to keep on going and dig a little deeper, and to make sure that you're informed on what's happening. So the real estate cycle. This was a concept, or is a concept, that was developed by Greg Head and a couple others. And what they did to kind of lay the foundation of it, they went and researched all the real estate markets in Australia, New Zealand, the UK, the US, Canada, very similar markets to ours, and just pulled stats to see if they could see a storyline. And they did. Over years and years and years, they did see a storyline. And I mean, this is relevant in any sort of market, the stocks or anything. There's always a boom, a slump, and a recovery, right? But they could actually see some triggers in the real estate world. So that's what I want to make sure that you go away understanding is, how do we see those triggers? How do we see those indicators in what's going on around us? So there's going to be three key drivers that we're going to look at. And I'm going to land a little bit on the last one and talk about that the most. First one is demographic. And we'll kind of just lay the foundation for these first two. Demographic drivers. So what does that mean? Net migration. How many people are moving to Toronto as opposed to how many people are actually leaving? More people are coming here than the opposite, right? So that creates a demand. Residential vacancy rates is one that they looked at. Employment levels. New housing construction, and first-time home buyers. Those were some of the key elements that they saw would drive a market. So we'll look at a couple of those individually. So these are the vacancy rates right off the CMHC website. The blue is October 2015. The red is October 2016. And if you were to look at some of this, if you were to look at, for instance, in the Newmarket, Aurora, Stouffville area, and you looked at the blue from 2015, not bad. At we'll call it just shy of 1% vacancy rate. Pretty amazing, actually. And you fast forward a year, and it's at it's probably 1.7 or something like that. Well, here's what a news reporter would kind of, if a news reporter was looking at this, here's what they would pick on. They would probably pick on stuff like this, right? This, and say the vacancy rate's doubled, tripled, or quadrupled since last year. Am I right? Well, what's the key factor I'm missing out here? Percentage. It's only at 1.65 or whatever the number we're looking. Even at 2.2, that's nothing, right? So it's just understanding what that looks like. But that's one of the key indicators. So if our vacancy rates all of a sudden jump up to 5 and 6 and 10%, now maybe there's something we need to keep an eye on, right? New housing starts. This makes sense. If you were just to look at this, Ontario has a lot of new housing starts. Year over year, again, the blue being 2015, red being 2016, and that makes sense. There's no surprises there, right? Nothing there. Okay. So let's jump into the next key driver. Financial drivers. So what do they typically look like? So our gross rate of return, our ROI, average rents, average income, for availability of financing, GDP, and the real estate values and affordability. Within the last year, those have been out of whack, right? $1 million properties that are little two-bedroom homes in Toronto, who can afford that when you're only making $50,000, right? However, we'll see some other stuff here. The average rental rates. So this is for two-bedroom homes and same areas. Anyone see a trend here from year to year? They've gone down a little bit, right? Year over year. So actually have gone down according to CMHC. So what does that mean? The demand may not be as high as it was once the previous year. Or maybe more investors are creating more investment properties, right? More units. It's okay. It's not too bad. The other one that they looked at was, we talked about the availability of financing. So this is from a good friend, Dion, who's going to be here next month. And I said, Dion, give me some rates of kind of the perfect borrower. So they have one or two properties, great income, and what kind of rates can they get? Garrett, I can still get them 20% down, which is our minimum for investment properties. Look at these rates, 2.99, 2.45, and both with what? 30-year amps. So the availability of financing is there. It's still really cheap. There has been a little pullback on some of that over the last few weeks, right, because of Home Trust. And what did that do? That was kind of a ripple effect against some of the other B lenders, right? Now, all of a sudden, they started pulling the strings back a bit. And in fact, we'll talk about that in a second here. So here's the big one. Here's what we're seeing right now is the emotional drivers. And we'll land here for a little bit, and I'll have some stats to go through with you. And Colin just gave me some more, in fact, out of our own brokerage. Emotional drivers. So I threw this up last month. These bidding wars are getting a bit much. Can you see these two guys with guns walking away from each other? They're going to do the big standoff, right? And I said it last month, but what are these two guys doing? They're dueling, but you know what? You know what we're seeing in the market right now? They just keep, that's right, they just keep walking. They're not even putting offers in anymore. In fact, they're not even coming to do showings, right? Colin just gave me some stats out of our brokers. And what did we say to Colin? In February, on average, we were getting 13 showings per property. Today, anybody want to take a guess how many? You heard him, 3. 3, not per week, not per month, per property. So you better be, I don't know what, you better have just the most beautiful property at a good value if you want to get it sold right now. And that's in our brokerage. And they are just simply walking away, or they're not even coming to the table. An investor's worst enemy is not the market, but his own emotions. So let's go through some of that, right? If you ask me, where are we on that roller coaster ride, or where are we right now on the wheel? I'd say we are, last month we were about here. We're probably about here right now. But it's going to come back up really fast, and I'll talk about that in a bit. So here's some news articles that we're going to talk about. Headlines. Maybe I don't need to say anything on that one. And these are all within the last few days. How Ontario's Liberals are worsening Toronto's housing crunch. Now, in a sense, they've stopped it, right? Next one here, if it comes. Yeah. New Ontario rent controls will mean fewer apartments for fewer condos, developers warn. We talked about the OMB, and this was an actual condo developer. I showed you the whole entire article. It was a developer saying at that time, I'm building this apartment building for rentals. Now you came in with these new laws, I am not building this apartment for rentals anymore. I'm going to go sell these as individual condo units. So what did that do? That did one thing, create more housing, but it didn't create affordable housing or anything like that for the renters that they were supposed to be doing, right? Interesting. What else do we got here? The boom is over. Canadian home buyers are walking away from deposits. It's true. Just today, in fact, on one of our own listings that we sold 6 weeks ago, the buyer's agent called me and we negotiated an extension for his buyers. His buyers have 2 properties to sell. He's been trying to sell them for 4 weeks, and he can't sell them. Which kind of puts us in a bit of a pickle, right? Because we have this great property that's supposed to close next week. So what did? We gave him a week extension. We asked for a bigger deposit, so they're giving us another $10,000 deposit. So we want more skin in the game. We don't want them to walk away. What else? We got them to pay another $1,000 to cover some of our expenses. And for good measure, this was the lawyer's idea, which actually is not a bad idea. We want a letter from their lender or mortgage agent stating that they have applied for a mortgage. We just want to make sure. But we're seeing, and the market will tell us, we're seeing deals just not even happen. Opportunity? For us? Perhaps, right? What else? There's just 1 or 2 more here. This is today. TD, RBC, CIBC, top forecast. Look to calm the housing fears. So all that stoppage that's happened over the last couple of weeks, and the Home Trust ordeal, this is the big banks now saying, no, we're okay. Like, go back and buy. We want to lend money. Because how do they make money? They lend, right? And no one's buying right now, so they're not making money. It's funny how the funny world, eh? Last one, Ontario's Fair Housing Plan fails to identify the real offenders. I just kind of put that up for fun. That's Ben Myers. He's actually saying the real offenders are premier and things like that. But anyways, we digress from there. Emotional drivers. Again, so how many days on the market does it take or how many days does it take to sell a property? Revitalization and renewal, number of listings for sale. We'll look at that in a minute. The real estate sale volumes, and the last one, which we kind of added since last month, I can't sell. I bought something 2 months ago and I can't sell my property. So the next few slides are going to be stats. Amazing, right? It's going to have a lot of numbers, but bear with me. You'll see some of the numbers I want to be highlighted, and we'll just kind of go through them, and we'll kind of compare it year over year. So in the red, that's what I want you to look at. So this is for April 2016, so a year ago. So this is all for York Region, and we're really going to zone in on the number of sales. So we've had just over 2,500 number of sales in York Region last April, just for the month. New listings and active listings, that's kind of the other two numbers we want to look at. So 3,300, 2,300 last year. For some of you that want to know, our average price in York Region was $946 last year. But there's a big discrepancy of, multi-million-dollar homes in King to $400,000 homes in Georgina. So there's a wide gap there. This is this year. Sales, 2042. What did we have last year? We had 2,517 last year. So almost 500 properties less than last April. That's a lot of homes not selling. 500 is actually a pretty big number. New listings, 4,783. Big number. Active listings, 3,128. New listings, though, let's look at that for a second. That is, who would agree that's a huge number? Let me tell you, it's not, actually. Can I tell you the agent's dirty little secret? That number is completely irrelevant, because here's what happens. We list a property for, say, $850. We do offer date next week. Offer date comes, there's no offers. I look at the seller looks at me, and we're like, I don't know, like where's everybody? The next day, I go back to the office, I cancel that listing, and I relist it for $900. How many times did I list it? Twice. That's just one guy, one listing, or one home. You see a pattern, like and that happens a lot. It happens a lot, especially when things aren't selling. When things aren't selling, things get relisted. So when the media or people talk about the number of new listings, it's very hard to track properties that get relisted. It takes a lot of time to track that, so we don't. They just look at this number. Oh, 4,700. When in fact, it's probably closer, I don't know what. Adam, what would you say? Like maybe closer to like 330? Yeah. Yeah, you're probably right. About 3,500 actual properties per se. We could spend the time to go through it, but we don't. Okay, so let's look at some actual facts here that we know we can actually rely on. New listings versus solds. So the first 3 or 4 months there are from April last year, and then we're looking at this year. And we kind of see a trend each year, right? And let's focus on this right here. So we see a trend. Blue is new listings. Red is actually stuff that's sold. Stuff that's sold, that's what we care about. So who thinks our number has gone up or down from March? Do we have more properties that sold in the month of April, or do we have less properties that sold in the month of April compared to March? Less? Same? More? Less. Wow. April's what? One of our busiest months of the year. And we sold less than in March. In fact, I have a note here saying 360 properties less than March. So let's look at some more stuff. So this is just the month of May. We don't have all the stats, so I can't show you all those other stuff, but I can pull some information for the month of May. This is today. This is today at like noon when I pull all this stuff here. Active listings, 4,279. Sold, this is what we care about, the sold, 1,219. So active listings. These are properties that are active on the market right now. You can go up on realtor.ca or wherever you want to go, your favorite website, pull them up and you'll see that number. What has sold above that is 1,200. Our average price of 1.13, higher than last year, or higher, remember last year was at 940 something? Here's what I see. That's 3,060 properties unsold. People are dying to get your property, to get their home sold. Dying, dying, dying. I looked at the stats on this, and I think, and I kind of calculated that because we have about 5 or 6, 7 days left in May. And if we add what's already sold in May and kind of average that out over the next number of days, we probably will end up at about 1,500. Still a big swing of different properties that are available, that properties that actually sold, right? So this is what I think we are in right now, an opportunity. So for those of you that know me and have been here a number of times, have I ever stood up here and said, now is the time to buy? No, I've never said that. That's not my style. That's not my mantra. I don't like selling from the front. We've all been to seminars like that. But I just want these stats to tell the picture. Do you think there's an opportunity here? Absolutely, I do. I do. It's a very rare occurrence for me to actually tell you guys to go buy stuff. Unless you talk to me personally, right? That's a different story, David. I truly, truly do believe that in the next, I'll say 3 months, that is our window. That is our window to go buy stuff. Because if you've got properties like my story, when with our listing, and the buying agent has 2 properties he can't sell, that's just one story, right? There's agents in here that'll tell you that multiply that story over and over again. I was telling Ron earlier, I was texting an agent yesterday, and they dropped their price by 200,000. Yes, in fact, yesterday. And I told him, it's still not in our price range. Like, how flexible are you? I said, I know it's it's the classic stupid realtor question because sometimes we're so boring, we just ask the same thing over and over again. Here's his response. Gare, bring me anything. Like, are you kidding? And that's in Stouffville. That's a nice home in Stouffville. But buyers they got their back up against the wall. So what happened is, that property that I was talking about earlier that I sold and we extended on, we don't want that to go back to market. There's no way. You know why? 4 other properties on that street are for sale, and guess when they got listed? Same time I sold my property. So they've been up for sale for that long. You imagine if you walked in there today and bought something, you'd probably get a pretty good price. Mandy?
Do you think that some buyers will, at this point, like even say that they put a $50,000 deposit down, but now the other homes on the streets have dropped by $200,000? Do you think you'll see buyers actually walking away saying, forget the deposit, I'll go buy this one, and I'm still up $150,000?
You know, I hadn't put that together yet. That's a good one. I bet you that happens. Because we're hearing about it in Toronto. People are walking away from deposits. And in Toronto, people were paying $300,000-$400,000 over asking, which is really not the true market value. They're just, so how do we compete, as an investor, right? Because we buy things based on what? We buy things based on numbers. How do we compete? When we know the top dollar is $500,000 for this triplex or whatever it is, we can't pay any more because this doesn't make sense. But this guy, I can put $550 at that. What do I care? Well, now that guy's gone. They're just not buying anymore. So there's or he can't close. Yes.
I need your opinion about something a bit more detailed. The way that you see is that you see a 3-month window of, let's say, down market. If you take a closer look, how do you see these 3 months? Do you see them as flat, or do you see as going down, then coming up? What about viewing these 3 months?
I'm not sure it's a good question. I'm not sure how far down we're going to go. But I do know this, because history teaches us all the time, right? What happened in Vancouver last year? In August, September is when they introduced their tax, right? and the market went, nothing happened. Well, similar to what happened here in Ontario, in Toronto area, right? And for those of you that follow me on Facebook, you'll know that I asked, hey, what's happening in Vancouver? And I had some very prominent realtors out there start messaging me in some private messages and stuff like that. They're starting to see the multiple offers again, and things have come back. Not to quite the pricing it was at, but at least the activity. And that to me tells us that, you know, September again is typically that month where people start selling and buying again, right? It's after summer. We got that kind of all wrapped up. So I don't know actually how far down we're going to go, but I have that gut feeling that in that September month, people get back on that bike and it'll start happening again. So that's why I'm suggesting these next few months are going to be an opportunity. Yeah. That's a good question. I would say just people, right now people are afraid to make a decision. Yeah, exactly. Once they get past that, then all the buyers will come back to the table because what everyone complained about, there was no inventory. Now the inventory got out there, and then almost at the same time, the government implemented these new rules, and people got scared. They didn't know what to do. So when you don't know what to do, what do? You do nothing. You run. You just forget it. I can't decide. So that's why I feel there's a true opportunity here. One that we probably won't see for a while again, and one that we haven't seen for a number of years, probably since back in like 2008 and 9. Yeah?
I was just wondering if you could tell us roughly what the inventory number is at now. Because in the past, we said, oh, we've got 15 days, and we've got
Oh, yeah.
17 days. How many days of inventory?
I have that up here. I don't want to, months of inventory right here. So this is April. So we're sitting at about 1.5. And the previous year, I remember seeing it. It was, 0.9, which is, 3.5 weeks of inventory. So now we're sitting at 1.5 months of inventory. But that's a skewed number, because we have all these listings. Ask me that number again in July, and I bet you it's closer to 2, just like that. Because we just haven't, we need time to gauge that, because everything in February was selling. So it's almost like we sold out, we sold out of the product, and then all this new product came on, so that number kind of resets. Does that make sense? Yeah, good. I don't want to camp out there too long. I want to get David up here, but there is an opportunity here. What are you going to do about it? That's my question to you. And I'd say, we would love to help you with that. If you don't want to use us, go use your favorite realtor and get out there and buy. That's the message. Is that clear enough? Clear enough. Good. So what are they? The key drivers are demographics, financials, and emotionals. We get past that emotional driver, and I think that's what we got that opportunity. So we don't want to be following the crowd. Good real estate investors do what, Mandy? They go against the crowd, right? They always see that opportunity in chaos, right? And that's kind of where we are. Good? Be in the know. That's what I say.